Hi, good morning and welcome to Power Breakfast in the Mumbai News Centre. I'm Pavitra Parekh and with me is Mangala Malu. Mangala, it's that time of the year again. There's been an incessant downpour all through the night, actually pretty much since yesterday morning. So it's a bad situation out there on the streets. Let me ask everyone to first off be safe and stay indoors as much as possible.
Absolutely, stay indoors, and us by dint of our work had to make it. And the sort of stress that I saw amidst all the colleagues that are here, they're worried about how do we get home from here or how do we get to work on time. Wonder what stopped the NSE and BSE to keep the exchanges shut at a time when the Bombay Municipal Corporation has said that the school should be shut and the offices should be shut as well. But that's another story for another day. We have our markets to contend with. 3 days ahead of budget. The S&P 500 closed at a record high. The SGX Nifty is indicating a positive start. First up, all the top stories, and then we get cracking on all the individual things that we're watching this morning. The S&P 500 closes at a new record as chip makers get a boost from US-China trade truce. Asian stocks mixed in early trade.
Oil prices pull back after overnight gains as investors consider the risks of a broad global slowdown. This despite OPEC's deal to extend supply cuts for another 9 months.
DHFL lenders decide to sign an intercredit or agreement to implement a resolution plan for the cash-strapped company. Sources say the lenders have decided to set June 29th as the reference date for resolution.
GST revenue for June comes in just above 99 crores, slips below the 1 lakh crore rupee mark for the first time since February.
Heavy rains lash Mumbai. The weather department predicts more in store for the next 2 days as well. BMC declares a holiday for schools and colleges.
Also on the show, details of Network 18's Mission Punny initiative as the government launches Jal Shakti Abhiyan to promote water conservation and to create awareness about the growing water crisis in the country.
All right, first up, let's take a look at the Asian markets. We are getting mixed moves coming in from the Asian markets, and this despite the S&P 500 closing at record highs. Remember, yesterday, most of the Asian indices shut with gains of almost 2%, and the US markets hadn't reacted to the good news coming over the weekend of a trade truce between US as well as China, or kicking the can down the trade war road for a bit. So some bit of consolidation after the big move that we saw in yesterday's trading session. The Korean markets underperformed yesterday and are underperforming today as well, and that's primarily on account of the fact that chip makers in the US now stand to benefit. So that's a lost business opportunity for the Korean chip makers who were earlier outperforming when the Huawei tension was on. The Taiwanese index lower by about 0.3%, but in light of this, the SGX Nifty dancing to its own tune, actually outperforming what the other markets are suggesting, and that's primarily because of a couple of domestic reasons. The first one, of course, will be that towards the end of this week we will have the union budget, and yesterday we did see a fair amount of short covering as well. Let's see whether this continues or not.
All right, let's also take a look at the US markets now. Wall Street ends higher as US and China agree to hold off on slapping additional tariffs on their products. Now, this is in an effort to resume trade talks, of course. The S&P 500 managed to jump 0.8% to a record closing high. The Nasdaq also fared well, around 1% higher. So that was how the US markets fared. We now have CNBC's Rahil Solomon to get us a wrap of all of the action on Wall Street.
U.S. stocks finishing in the green, the Dow adding 117 points, the S&P up by 22 and notching a record close, and the Nasdaq up 84. U.S. construction spending falling unexpectedly in May, dropping to its lowest level since last November. That's according to the Commerce Department. Meanwhile, private construction investments hitting a 2.5-year low. The weakness in construction, the latest sign that the economic growth did slow in the second quarter after surging at the start of the year. Crude prices jumping this afternoon. That's following news that OPEC, the oil cartel that controls much of the world's crude reserves, has agreed to extend supply cuts by another 9 months. The move will likely draw scrutiny from President Trump, who has publicly urged OPEC to pump more oil into the market. And House Speaker Nancy Pelosi reportedly drafting new legislation that would allow Medicare to negotiate lower drug prices on the country's 250 most expensive drugs, giving the government the same bargaining power as private insurance providers. Now, if passed, the bill will also reportedly extend the drug discounts to private insurance plans. And that is the action from the U.S. market. Back to you in Mumbai.
All right, and across the European indices, key markets also ended in the green after trade tensions between both US and China eased after Donald Trump and Xi Jinping's meeting at G20 summit over the weekend. So most of the European markets ended with gains of about 1%, and the French index by about 0.5%. Remember, the European indices entered the event long with a gain of about 1% and 0.5%. And then post the event, we saw the big move all through yesterday's trading session for India during the Indian Standard Time. The European futures indicated a gain of about 1.5%. At the high point, the European indices were much higher and closed with a gain of about 1%, but mildly off highs if you must.
All right, let's also take a look at the world of commodities now. Crude oil prices are off the highs after climbing over 1% after OPEC agreed to extend supply cuts. This was for a period of 9 months. We also have positive cues on the basis of the US-China trade talks.
Right, on that note, let's listen in to Francisco Blanche of Bank of America Merrill Lynch on the recent rise in crude.
I think both OPEC and the non-OPEC members of the Declaration of Cooperation have been working towards establishing a more formal framework. So this is clearly a positive. As we like to say, there's an OPEC plus put in the market. Russia's probably been the most reluctant member of this new framework, precisely because there's a lot of voices in Russia that would like to see production domestically continuing to grow rather than give away market share to Texas and Oklahoma and encourage a further shale expansion here.
A more market opinion now on the US markets going forward.
It's correct that consumers are doing pretty well here. We're looking for about 3.5% growth in consumer spending in the second quarter, but that follows some pretty weak quarters. But I think the bigger issue is exports are really pretty weak, and investment spending, which is what we were trying to increase with the tax cut last year, that is looking weak across the board. And construction spending is probably, that's part of that story here. So I think it's an economy of two halves right now, but when you put them together, particularly because we've got an inventory overhang, I'm looking at economic growth of not much more than 1% on average in Q2 and Q3. I think the market's in a very happy mood, and what's really going on here is I think the Federal Reserve indicating that they're going to cut interest rates has pushed long-term rates down to such a low level that there is no real value in the bond market, and that is just pouring money back towards US equities, and that's really what's going on. The other thing I think that's going on is the US is benefiting in relative terms relative to the rest of the world, because this trade tension is really hurting global manufacturing, but it's hurting global manufacturing more than US manufacturing. So the US seems like the best house in a deteriorating neighborhood. I think that's what's helping US stocks.
We've had a collapse in Treasury yields over the course of the past month or so, broaching down the 2% arena. And I think part of what's embedded within that Treasury yield right now is not only the recognition, as you noted, of a slowing global economic outlook, and in particular with weaker manufacturing data, but there is also appears to be an element of pricing in of much more of a recessionary risk scenario within the U.S., which the data does not necessarily support, hence the expectation that the Fed will cut fairly meaningfully by the market over the course of the next 12 months, starting with the July meeting coming up overall. What played out in the G20 was not a resolution of any type, but simply a truce that more or less maintains the status quo and provides a little bit of an uplift to sentiment. But beyond China, the administration does seem to be focused on extending its trade tariffs with Europe as well as elsewhere. So we don't necessarily see the overhang of increasing tariffs necessarily being resolved, even if a China deal is made overall. And we do believe that the policy actions that are going to result in all likelihood in potentially greater trade barriers will dampen global growth.
Welcome back. You're watching Power Breakfast on CNBC-TV18. Interesting that, while there is a lot of rain around, ironically, we're also suffering from our worst water crisis. In fact, as India suffers from its worst water crisis in history, at Network 18, we believe that this crisis is an opportunity for the country. We can fundamentally change the way we use and conserve water. Mission Punny is our initiative to facilitate conversation so that sustainable water use and conservation stay at the very top of public consciousness. Through stories from our reporters across India, discussions with experts and ground events, we expect to achieve 3 key goals: awareness, solution and inspiration. This will be a nationwide campaign across all Network 18 platforms involving the Aam Aadmi, the government, schools, and it's the school kids who will lead this movement. Jal Shakti Minister Gajendra Singh Shekhawat has said that he expects Network 18's Mission Punny to create an approach of rational use of water.
राजस्थान जैसा दे प्रदेश जिसके साथ में कल्पना ही ये की जा सकती थी कि ये वाटर स्ट्रेस्ड है, पिछले 3 साल के आंकड़े जिस तरह के आए हैं और जो अभियान राजस्थान ने लिया था, राजस्थान की सरकार ने, पूर्ववर्ती सरकार ने जो अभियान लिया था, उस अभियान के कारण से राजस्थान के वाटर स्ट्रेस डिस्ट्रिक्ट्स और तालुकास की संख्या घटी है. सो आई सपोर्ट नेटवर्क 18's मिशन पानी and I appreciate the wonderful gesture taken by the channel, and I wish a huge success and I wish that this is going to help in the change of behavior of the general public, and it will create an approach of rational use of water.
All right, so that was Gajendra Singh Shekhawat. He's talking about creating awareness for water conservation as India suffers from the worst water crisis in its history. But shifting focus now, the BJP has a surfeit of political capital, but Finance Minister Nirmala Sitharaman starts off with a shortfall of financial capital. Tax revenue for FY20 is likely to be nowhere near the 17 trillion rupees mark estimated in the interim budget. Now, given the poor growth in tax revenues last year and slowing economy as well, tax revenues this year may be 1 to 1.5 trillion less than the 17 trillion estimated in the interim budget. Likewise, expenditure may also overshoot because the PM Kisan plan has been extended to all farmers versus just the small farmers that it was meant for earlier. Also, more money is now needed to recapitalize banks. Some economists therefore expect that Nirmala Sitharaman will allow the fiscal deficit to rise to 3.6% this year. Now, will this be an adequate amount of fiscal deficit boost, or will it push up interest rates and hurt the economy? Here's an excerpt of a chat that economists Pranab Sen, Sajid Chanoy, Hitendra Dave and Soumyakanti Ghosh had with Lata Venkatesh.
As far as the fiscal deficit is concerned, we focus excessively on the fiscal deficit to GDP ratio, right? What we are talking about is a situation where the economy is showing very, very clear signs of slowing down. So what really should matter is what should be, if any, the fiscal stimulus that needs to be given. And that is in terms of an absolute amount. Now, what happens to the denominator is a separate story, because given the trends that we are looking at, our sort of God-given denominator growth of 11.5% is very unlikely to happen this year. I mean, we're probably looking at something closer to 8.5 to 9%. So let's not get overly focused on the fiscal deficit GDP ratio and ask the question, how much of a stimulus in absolute terms does the government need to give, if any?
So I'll come to the fiscal stimulus bit in just a bit, how much and through what means. But let me get Hitendra into this. Hitendra, Dr. Sen, clarion call for a fiscal stimulus. Will the market brook a higher borrowing number? Gross is what, 7 trillion? If it is, say, 7.2, 7.3, 7.5, will the market snark it?
No, I think you have to see everything in the larger context, and I agree with Mr. Sen there that, let's not get obsessed about a particular number. I also completely agree this God-given assumption that we will grow at a nominal rate of growth of 11 to 12% is really, really doubtful now. I think all policy makers really need to recognize the environment in which we are operating. I think we haven't operated in an environment where we were looking at a high single-digit nominal rate of growth. Yes. Once you accept that to be the environment in which the finance minister and the ministry is working, I think everything has to be seen in that context. Whether the market will accept it or not, I think we've always worried about that quite a bit, and rightly so. And people like us have also been advising governments not to borrow excessively. But I think the context is very different now. In the current context, if you still stay with your historic dogmas, etc., I think you recognize that the economy does need a boost, whether it's monetary, whether it's fiscal, whether it's administrative.
But if it only pushes up interest rates, then what's the point?
No, I think we shouldn't assume that, we are operating in a world where all economies have really opened the fiscal taps and interest rates have been low. Borrowing costs have been low. So I think once you recognize that there is a growth challenge and the both significant contributors to economic policy making come on the same page, then I think thereafter what needs to be done to ensure that the fiscal stimulus does create economic activity as opposed to economic contraction through higher interest rates, those can be discussed.
Okay, fair enough. Both of you on the same page saying let's discuss stimulus and growth and then we will talk about the cost of money. Sajid, I come to you on that. You have been a purist and, as one of the authors of the Ujit Patel Committee, you well recognize, you'll have done deep studies on how fiscal and monetary stimulus simultaneously can be bad. But I'm not even talking about inflation. I'm just saying, is the economy, is the market, and are you prepared for a higher fiscal deficit? Would you say 3.6, 3.8 is par for the course?
Yeah, that's why I empathize with the new finance minister, because I think the budget is facing a fundamental dilemma. The dilemma is the following, that listen, we all now agree growth momentum has slowed meaningfully, output gaps have opened up, core inflation has gone from an annualized momentum of 6% to 2.5%. So there is a theoretical case to be made for a counter-cyclical, both monetary and fiscal policy. The problem with that argument is the following, that in the current environment, monetary policy efficacy is limited, in part because I would argue there's a little bit of a fiscal overhang here, number one. And number two, what we're seeing is a re-intermediation of credit from the shadow banking system back to commercial banks, where the regulatory preemption is higher. And then those environments around the world, you see efficacy of monetary policy is quite limited. Now, the question is, if you do undertake a fiscal stimulus, I actually believe at these levels of borrowing, this could be counterproductive, right? You can further undermine monetary transmission, because tomorrow the deficit's 0.5% of GDP higher. My sense is bond yields will be meaningfully higher, thereby undermining monetary transmission. And if you do this off balance sheet, all you see is you may contain the risk-free rate, but then credit spreads, because of so much quasi-sovereign issuance, go up very sharply. So the dilemma is, on the one hand, there is a case for a stimulus. On the other hand, it could be counterproductive because it hurts monetary transmission. But there is a way out, Lata. And the way out is, now one needs to be creative and bold in a second term. And the way out is the following. If asset sales are the basis for which new expenditure is financed, then you can have your cake and eat it too. And let me tell you why. Last year we had asset sales of about 0.5% of GDP. Let's assume the government is bold and can actually push through 1% of GDP in asset sales. Then you can stick to last year's fiscal deficit, number one, which means market borrowing does not change and the bond market remains comfortable. But because you're sticking to the same deficit number, and more of the revenues are coming through asset sales, which are not contractionary like taxes, the effective fiscal impulse in the economy is positive. It's like imparting a fiscal stimulus. So I think there is a way to thread the needle. Don't breach the deficit by much, but do a lot more asset sales. Then you can keep market borrowing down, keep interest rate contained, and still effectively impart a stimulus. I think that's the only way to square the circle in the current environment.
All right,
welcome back. Now, we've already taken a look at how the global markets fared, but back home on Dalal Street, the market managed to snap its two-day losing streak. Both the Sensex and the Nifty ended at their 3-week closing highs. The Nifty Bank also managed to close at a 1-month high. Nigel is now with us to tell us what we should keep an eye on in today's trading session. Hi, Nigel.
Well, morning, Pavitra, and morning, Mangalam. Very important flash up for you on the screen. It's going to be a normal trading session today, so any sort of hopes, I don't think anyone was really expecting it to be shut, because the exchange will be open no matter what. But good, all three of us have made it to the office, and things look pretty clear, at least from Bandra till Lower Parel. So that's just a quick weather update as well for everyone out there. Well, getting back to the markets, it was a good trading session yesterday. We did break that losing streak. A couple of trading sessions we ended in the red. Yesterday was a strong trading session actually. Now, in fact, the Nifty Bank is just around 1% away from the fresh all-time highs. The Sensex and the Nifty as well, they're at a 3-week high, closer to that. So that's good news basically. The Nifty Bank was up close to around 250 points. The Nifty as well was up more than 70 points in yesterday's trading session. So pretty good going. A few heavyweights they contributed. HDFC Twins, Reliance Industries and TCS. All of them were the top contributors in yesterday's trading session. So you should get a contribution chart that comes up for you on the screen. A couple of indices were in focus. First day of a new month, so auto stocks in focus. The auto index ended higher with a gain of around 1%. But remember, it was a mixed bag because Maruti was a disappointment. Bajaj Auto was reasonably better. You had something like an Escorts as well. The stock ended virtually at the high point of the day. The problem is the mid-cap index. On a day where you have such hefty gains on the Nifty and the Nifty Bank, yet that catch-up is not happening, and the mid-cap index was a relative underperformer. So that ended marginally in the green. In fact, at one point of time, it even dipped in the red. Now, trading volumes today could get impacted because a lot of dealers, I believe, will not be able to make it to their offices. So in that case, you watch out for lower trading volumes in today's trading session. But talking about lower trading volumes today, I was looking at the institutional data yesterday. That as well was a little bit lower. So yes, we did have the FIs. They bought close to around 400 crores odd. The DIs sold a very, very small 50 crores odd. But overall volumes from the institutional side were relatively slower. In terms of what the FIs did in the F&O market, it's a mixed bag. They're going long on the index and they're buying some puts as well. So in case things go wrong, they have a bit of a cushion on the downside. And if in fact we get up and going or a pre-budget rally, then in fact, you'll see them making money on their long positions. Short point, the net long on the index, 62% of their positions on the long side. And in terms of a range, you're looking at the maximum open interest. Now that comes in at around the 12,000 call and the 11,800 put on the downside. So that's the broad range that we're looking at. The bulls, they will want to end today's trading session in the green. Remember, we have crossed that 11,850 odd level, but very marginally so. Maybe get up and going, get cross that 11,900 mark and decisively so. So that's what the bulls will be looking at. Otherwise, I believe, the range could have moved up from around that 11,650, maybe 50, 80 points higher from around 11,700, closer towards 11,950. Besides the markets, key montrables, the GST collection was a little bit lower, and that's the lowest we have seen since the month of February. So keep an eye out on that factor. Remember, GST collections is very, very important. If we can get to 1.1 lakh crore at some point of time, the markets will really, really like it. For the time being, we're struggling to even get, closer to that 1.05 lakh crore. And the other factor I'm looking at is Brent crude prices, because that's cooled off a tad bit. I remember yesterday and today, it went to around 66.5. Now, in fact, the last time I checked, it was sub $65 per barrel. So that's good news.
Absolutely, Nigel. That is good news, and which is why perhaps despite a muted Asia screen, we have the SGX Nifty, which is indicating a bit of an outperformance. But individual stocks, you'll be watching out for a lot of them.
Yeah, I'll be watching out for a lot of stocks. It's the first, the initial few days of a new month. So auto sales, we got some yesterday, we got some post-market. Some of them look disappointing. Eicher Motors, I love the bike, but the numbers are, a bit of a disappointment. We're working with a number of around 62,000. It missed those estimates. Hero MotoCorp as well, working with a number of around 6.25 lakh units. It came in closer to around 6.1 lakh units. So not great news out there as well. Marginal miss on both those two. TVS Motors as well, in comparison to expectations of a reading of 3.11 lakh units. That was, quite pretty much lower. So watch out for that stock as well. All those three two-wheelers were a disappointment. In terms of a positive surprise, Tata Motors, I'm looking at the domestic sales plus the export sales together came in at more than 50,000 units. Now the street was working with a number of around 45,000 units. So that was a bit of a positive out there. Earlier we were talking about Brent crude prices cooling off. When that happens, you see a bit of a jump up in terms of OMCs as well. So BPCL, HPCL as well as IOC. We'll keep an eye out on all those three stocks. Remember, there is talk that the government will be coming out with another ETF. So that's normally an arbitrage trade that plays out with the PSUs as well as, prior to that fund being launched. So we'll keep an eye out on those stocks, the PSU basket on the whole. Cox and Kings, the bad news continues. The stock has now come down to around 35 rupees. Or the price told you something was wrong. They've defaulted on 50 crores of commercial paper, and they've got a downgrade coming in from Brickwork as well as Care. Moil, they've gone ahead and hiked prices marginally by around 5% approximately, so keep an eye on that stock. And Apollo Pipes, don't talk about it very often, but the operational data looked good for the past quarter. They have jumped up by close to around 20%. And finally, we have one of those InvITs, the trust has, that is that Sadbhav Infra projects, 9 projects out there, they have got taken up. So the Sadbhav Group stocks will be in focus in today's trading session. Let's hope we have a good day and we all make it home as well today in time, because the gods above or the clouds above told you that though everything is clear, just keep looking up, because you never know when things could get a little bit wobbly.
Absolutely, things could get a little bit wobbly, Nigel. But interesting that we did not speak about the impending event today at 3, India versus Bangladesh. You think that's our boys go home?
Our boys, we're going to bounce back. Watch it how, Mangalam. I'm telling you, all of us, we're going to come. They're going to come in there. They're going to play a great innings today. I'm backing my boys. I was so disappointed on Sunday. But trust in these boys, I
have a feeling that Dhoni will come and knock the daylights out.
I just hope, Dhoni, because, you can't question a man like Dhoni. But any which ways, we're looking out at 3 p.m. as well. Let's hope by around 4:15, 4:30, we're sitting at home, hot cup of tea and watching our boys.
Just tea?
Yeah, it's a Tuesday, Mangalam. Don't get me into trouble in office as well as at home. So it's tea today, for sure.
All right. Okay, so with that, we move on to another CNBC-TV18 exclusive. We learned from sources that the lenders to DHFL met last evening to discuss a resolution plan for the company under RBI's June 7 circular and have agreed upon the timeline under which the resolution plan will be implemented. Ritu Singh, who alerted us about it yesterday, joins in with details of what was discussed in the meeting.
That's right, the lenders to DHFL held their first meeting under RBI's June 7 circular to consider a resolution plan for the company, and 2 key decisions were taken in this regard by the lenders in their meeting. The first, of course, is that the lenders have agreed to sign the inter-creditor agreement, which they target to do by the 5th of July, which will also be the next date for the lenders of DHFL to meet, is what we're given to understand. For any resolution plan to be implemented, the first step would be the signing of the ICA, and therefore this is the decision that has been taken now collectively by all of the lenders led by SBI, Union Bank and Bank of Baroda. The second important decision that was taken today was that all the lenders have decided to refer to June 29th as the reference date for the default of DHFL, which gives them 30 days until the 29th of July, which will be called the review period under the new RBI norms, during which they have to sign the ICA and decide the course of action to be taken, because they will only have 180 days at the end of that 30-day review period starting the 29th of July to finalize the resolution plan, failing which banks will be forced to make excess provisioning as per RBI's norms. Various steps are being considered: securitization of asset, conversion of debt to equity, but all of those steps will be taken once the ICA is signed. So these are the key things that have come out of the first meeting. The next one will be on the 5th of July.
Welcome back. It's Power Breakfast on CNBC-TV18 that you're watching, and it's the early part of the month, so we keep an eye out on the auto sales. Auto sales downtrend continues. Sonia's here with the key takeaways this time around. Sonia, yesterday the numbers didn't look good during markets. Post markets, the story was the same?
Well, it was. The numbers have really been weak across the board. So if you look at two-wheelers, passenger vehicles, commercial vehicles, the numbers don't look good at all. Post-market hours, the weakest of the lot really was Hero MotoCorp. Not only were the numbers below street expectations, it was almost a 12.5% year-on-year fall that Hero MotoCorp has seen in their numbers. At 6.16 lakh units, it was lower than the street estimates of 6.25 and much lower than the 7 lakh run rate that they saw same time last year. So that stock could be under pressure. TVS Motor sales were also weak, so it was a 5% fall that we saw in TVS Motor sales. Now, if you look at the commercial vehicle space, across the board there has been weakness. So Eicher Motors commercial vehicle numbers were down almost 30% year on year. Royal Enfield sales were also quite weak, but I guess this was something that the street was anticipating as well. So Royal Enfield sales largely in line with expectations, although it was on the weaker side. And finally, Tata Motors, the domestic sales were down by 14%, including exports as well. There was a double-digit fall, and the management said that there was a subdued demand sentiment which continued. Customers have been postponing their purchases. Even in the passenger vehicle space, the customer sentiment has been pretty low because of the liquidity crunch, and the industry continues to remain quite stressed. So no recovery either month on month or year on year for any of these automakers. Back to you.
All right, thanks a lot for that, Sonia. But back home, the June GST collections missed the 1 lakh crore rupee mark for the first time since February. Timsi Jaipuria is here with all of the details. Timsi, another slip in the collections this time?
Well, that's right. GST collections for the month of June have yet again slipped below the 1 lakh crore rupee mark, inching just to 1 lakh crore rupee mark. The June collections have yet again given a warning to the government that they need to improve various measures to improve collections in the coming months to meet the asking rate. However, when we spoke to senior government officials, to MOS Finance, they all said that government is continuously taking efforts to improve collections. They will now focus on increased compliance, increased enforcement, and yes, definitely the new proposal of introducing e-invoicing was the crux when they said that e-invoicing is actually now going to further curb the tax leakages. So let's see what finally happens, how soon government is able to plug the tax leakages. But yes, as of now, June numbers are looking a little disappointing because they are below the asking rate, which is around 1.15 lakh crore rupees. For that matter, they are even below the asking rate of last year, which was 1 lakh crore rupee mark. So let's see what the upcoming budget unveils as a target for the GST collections. And yes, what are the future steps and actions that the government takes, especially when it comes to improving the GST collections figures. We'll keep you posted.
See, we have got little less than 1 lakh. And so what we see is that this figure, because we have 1 day lesser number, right? And we also see this month in the import side, so far as the domestic GST, we got about 10% growth as compared to last year's. See, if you consider this with the absolute number, that when we see 14% growth, that is something that we must try to achieve that number.
Many of our tax collection in custom side and even other places where the IGST is collected, that also is not system driven. So they are manually collected. Every month we collect minimum 95 crore to 100 crore on a manual mode. If you add those 95 to 100 crore, we have crossed 1 lakh crore. But that apart, it is not the figure that matters. It is the sentiment and the process in which we approach the entire process. Second year of GST is fully stabilized. Whatever rates have been there, rationalized. The processes have been further simplified.
All right, that was PK Das indicating the second year of GST has been fully satisfied, if you must. And talking about the second anniversary, it was the second anniversary of the rollout of the goods and services tax 2 years ago. On July 1, 2017, this new tax regime replaced almost all indirect taxes, and since then it has undergone several changes. Former Finance Minister Arun Jaitley, who was at the helm of the GST rollout, has called it the monumental restructuring of one of the world's clumsiest indirect tax systems. In his blog on Facebook, Jaitley has called the tax consumer and assessee friendly and added that it has reduced the tax burden on consumers while resulting in an improvement in tax collections. Highlighting the achievements of the GST over the last 2 years, the former finance minister wrote that the assessee base has increased by 84% since the rollout, standing today at 1.2 crore. Corporate India too has welcomed the changes made by the GST Council, but recommend making further changes, which include rationalization of tax slabs and a few things, simplifying returns by having a single registration window for service providers. The industry is also sought bringing things like electricity, oil and gas, real estate and alcohol into the ambit of GST.
All right, so a lot of these suggestions that Mangalam just took us through, these are about taking the goods and services tax regime to the next logical step. But now these are not the only areas that the government is focusing on. Anurag Thakur, who is Minister of State for Finance, says that the government's top priority is to fix the problem of fake invoices.
Indian GST got settled in the shortest possible time compared to the time taken even by the countries having single national VAT. However, I would like to mention that the menace of fake invoices needs to be checked, as the actions of few unscrupulous traders make the majority of honest taxpayers. I would like to especially emphasize that the government is serious about curbing this menace.
All right, with that, we move on to another budget explainer from our Budget Explainer series. My colleague Kevin Lee decodes what exactly capital expenditure and capital receipts mean. Take a look.
The union budget is a statement of the government's expenditure and income. Simply put, it's a hisab of where the government gets its money from and what the government spends its money on. However, there are two types of expenditure and receipts: capital and revenue. Today, we're going to explain to you what capital expenditure and capital receipts mean. Let's first talk about capital expenditure. The government spends its money on different things, but to classify as capital expenditure, one of two conditions have to be met. The first condition is the creation of an asset. An asset, simply put, is something that you own. If the government spends its money on constructing a new metro line or a new flyover, it's creating a tangible asset. So this counts as capital expenditure. However, if the government is spending money on servicing that metro line or the flyover, since a new asset is not being created, this does not count as capital expenditure. The creation of an asset is condition number one. The second condition is the reduction of a liability. If the government is spending 40 crore rupees to repay a 100 crore rupee loan, then it is reducing its liability by 40 crore rupees, and hence this counts as a capital expenditure. A liability, simply put, is something that you owe. If a government is spending that same 40 crore rupees to pay salaries, since this is not reducing any liabilities, it does not count as capital expenditure. So capital expenditure is any form of expenditure that creates an asset or reduces a liability. Capital receipts, on the other hand, is a form of income to the government, and to get the conditions for this, we just need to flip that original formula on its head. Capital receipts are anything that reduce assets or create a liability. Let's look at some examples. If the government has to borrow money from the RBI or another country, money is coming into the government's account. However, because the government has to pay this money back, it's creating a liability. So this would count as a capital receipt. Similarly, if the government is disinvesting part of its stake in a government company, for example, LIC, money is coming into the government's account, but it's reducing an asset. In this case, it's holding in LIC. So this would also count as a capital receipt. So that sums up capital expenditure and capital receipts.
All right, it's time. You're still watching Power Breakfast on CNBC-TV18. Now, heavy rains have lashed Mumbai and the neighboring areas. The downpour is continuing for the 5th straight day. Now, the weather department has said that the rains will continue for the next 2 days at least. The BMC has also declared a holiday in schools and colleges across the city.
All right, and as a result of this, these incessant rains, a wall has collapsed in Malad East, as a result of which we have a lot of people who have lost their lives as well. Vivek Gupta of CNN News 18 is here to give us a ground report of what's taking place in the city. Vivek?
मुंबई में भारी बारिश की वजह से मुंबई के मलाड ईस्ट इलाके में देर रात बड़ी घटना घट गई है। आपको बताना चाहेंगे कि पिंपरीपाड़ा इलाके में जो आप सेफ्टी वॉल देख रहे हैं, इस सेफ्टी वॉल अचानक ही ये जो आसपास के जो स्लम देख रहे हैं उसके ऊपर गिर गई है, और इस हादसे में जो आधिकारिक पुष्टि मिल रही है कि 14 लोगों की मौत हो चुकी है और कई लोग इसमें घायल हो चुके हैं। और आप देख सकते हैं किस तरीके से जो पूरी की पूरी जो वॉल है वो जो यहाँ पे स्लम था पिंपरीपाड़ा चिंचवड़ में, वहाँ पे ये पूरा दीवार गिरी है, जिसकी वजह से काफ़ी लोगों की मौत हो चुकी है। जो पुलिस के मुताबिक 14 लोग की मौत हो चुकी है और कुछ लोग बुरी तरह से घायल है। और यहाँ पर ये जो एरिया है काफ़ी स्लम एरिया है और सकरी गली है, जिसकी वजह से पुलिस और फायर ब्रिगेड को आने में ज़्यादा तकलीफ हो रही है। लेकिन आधिकारिक पुष्टि की जानकारी मिल रही है कि 14 लोग की मौत हो गई है और कुछ लोग शायद इसमें दबे होंगे, इसलिए फायर ब्रिगेड और NDRF और जो BMC के अधिकारी हैं मौके पर पहुँच रहे हैं और कोशिश कर रहे हैं कि जल्द से जल्द जो डेब्रीज हैं, जो मलबों से हटाया जाए। अगर कुछ लोग इसमें दबे हुए हैं उन्हें जल्द से बाहर निकाला जाए। मुंबई से कैमरामैन रमाकांत तिवारी के साथ विवेक गुप्ता, न्यूज़ 18 इंडिया।
Welcome back. It's time to take a look at the commodities space now, and Manisha Gupta is here to take us through all of the updates. Hi, Manisha.
Hi, morning. And we have seen a lot of volatility. Yesterday, you saw the crude oil prices gain up by 3% as the OPEC and allies did decide that they are going to extend the output cuts of 1.2 million barrels until March 2020. But then that got completely shadowed with the kind of economic data that we saw. So whether it was the PMI manufacturing numbers that came in from US were much on the weaker side. And you have seen similar numbers for the month of June in Asia and much of Europe as well. And that really puts a question mark on the demand side. In any case, the prices had run up in anticipation that the OPEC and allies will extend output cuts. And once you got that, you did see some money being taken off the table. The base metal prices also have reacted in a similar fashion. We did see multi-week and multi-month highs for many of the metal prices after the G20 summit and the positive outcome in sense that US and China were ready to renegotiate the whole trade dispute. But after that, the weakness in economic data has weighed onto this space as well. So most of the metals last night ended slightly on the weaker side. And Asia today has opened quite mixed, whether you look at ferrous or the non-ferrous metals.
Absolutely, Manisha. In fact, while the Asian commodity markets are mixed, the Asian equity markets are mixed as well. In that, the SGX Nifty is actually indicating a outperformance. So, in that light, it's important to see the cues coming in from the F&O space. Yesterday, in the cash markets, the FIIs, they bought around 430 odd crore rupees. And thankfully, the July month started with a purchase in the cash markets. Let's see whether this sustains or not, because all of June we saw a sell coming in from the FIs. In index futures, there was a purchase of close to around 450 odd crores as well, where 3,700 longs were added. The bit of an up move that took place yesterday above that 11,800 mark for the Nifty made the shorts cover a few of their positions, so there was unwinding of close to 1,600 contracts out there. In index options, very interesting moves coming in. While there has been long positions which have been unwound as the market moved higher, we saw some long puts being added. People buy puts for protection on the downside, and in the last two trading sessions, nearly 30,000 puts have been bought, perhaps ahead of a big event like the budget. The up move that took place yesterday also took a couple of these call writers with them, so we had short calls which were unbound to the tune of 3,300 contracts, and some short puts were added to the tune of 940 contracts. Importantly, watch out for the 11,800 mark at the lower level. That is where the maximum open interest is for options that expired this week. And on the higher level, we have the 12,000 call, which has seen a fair amount of writing. 11,800 put, so the bulls would believe 11,750 to 11,800 is where we can see some support, while at the higher levels, above 11,900, where the SGX Nifty is indicating a bit of an opening, there could be a bit of a hurdle. So let's see how that pans out. Finally, watch out for BPCL. The stock ended at the low point of the day, and a lot of short positions were added, but overnight, we saw crude prices decline a little bit. So could there be some short covering or not is something we'll see.
All right, thanks for taking us through all of those cues from the F&O space, Mangalam. But with that, we're completely out of time on Power Breakfast. Thank you for watching and stay tuned. Bazaar Morning Call comes up next.